whether you're joining us here on Zoom or whether you're watching it on YouTube live streaming, you are very welcome. Okay, my name's Paul. Today we're going to do something just a little bit different for you all, ladies and gentlemen. Namely, what we're going to be looking at is just we're going to have a little look at. We're going to do one of these sessions over the non-farm payrolls jobs release, all right, which would be in about 15 minutes time, all right. So what we thought we'd do is just mix it up a little bit, do something a little bit interesting, and as I said, just give you a little bit of insight into NFP, and also we'll watch it together, okay, and we'll look over it and we'll talk through what, if any, opportunities we actually see arising. Because it's going to be a live trading environment over one of the major news announcements of the month. What you might hear in the background is is my squawk box going off in the background. Okay, it's my new squawk box, just give me an update, which is what will actually help us when we come to look at the news. If you're joining us here, as I said, on YouTube, okay, it's fantastic, fabulous. Hopefully you'll be able to subscribe to the YouTube channel, and also if you like and finding this useful, give us a like, or if you've got comments, please put them in the YouTube comments box, or you'll be able to put them in the chat section here on Zoom. But everyone, you're very welcome. Yanis, Tina, Magdalena, we've got great numbers here. Okay, today you're all very welcome. Thank you for saying hello. And you'll also see is that as I said, my wonderful assistants put there. If you've got any questions, put them in. We'll try and talk about it. As I said, it's going to be a little bit of a free rolling session, this, but I do have a few slides for us to do just to actually help brief those who are completely new to trading in terms of what we're actually looking at. So just bear with us a minute. I'll bring up the slides and we'll have a little bit of a chat as we run down to the actual release of the news. So as I said, just bear with us a second, okay? What you might be able to see here, there is actually, that is the Admirals Premium Analytics page there, okay, within your site. That has all sorts of information on there that we might actually look to utilize today as we go through our own piece. But more importantly, what we're going to do is, I'm just going to, as I said, just 1 second, is actually bring up the slideshow there. I'm hoping that you can see those. Hope you can see that slide. Maybe we'll just try and change that maybe a little bit, put that a little bit better for you all. Okay, just to be able to see that. As I said, hopefully you can see me, hopefully you can hear me, and just as I said, there might be the squawk box in the background. Remember, Admirals, all right, okay, a global broker with local presence, licensed and regulated across a wide range of regulatory environments, and providing competitive spreads on the most popular trading products, allowing you to engage with markets in both MT4 and MT5. Any questions about Admirals, please get in touch with your account representative. They'll be very happy to help guide you in the as always, as I said, if you're watching this, some of you here will be on the YouTube channel. By all means, make sure that you subscribe to our YouTube channel itself at Admirals Global. If you find the information, the content we put out here useful, give us a like. If you've got comments or thoughts or questions, slap them in there, okay? We're always fascinated by whatever sort of feedback you'd be happy to give us. So what we're going to talk about, as I said, is we're kind of talking about kind of live trading over NFP. Well, I appreciate that we have a broad range of experience of people in the room. All right, some people who are complete beginners, others who've been trading for a while. There'll be people here in the room who have absolutely no idea what NFP is. All right, we'll have a quick explanation of that. Talk about why is it important to us as traders, and we'll talk a little bit about what can we do to prepare ourselves to trade it. So if you catch me just watching, looking at my watch or clipping through some of the slides, it's only because I just want to be able to get as much as we can do before the numbers start to fly out the door. Those who don't know me, my name's Paul. I've traded for many years. You can read that there yourself on the slide. All right, my kind of style for intraday trading tends to be mean reversion or reversal trades, which might be of relevance to today. It'll all depend upon how the price action plays out post news. So let's talk about NFP. Right. So in previous sessions given by myself, my colleagues Marcus and Jens, we have looked at the impact of trading around major news announcements. And we've talked about, what needs to be sort of taken on board to understand that. There are a myriad of major news announcements that come out every month, which, offer opportunity to educated traders. And that's what these sessions are about, is helping raise your awareness and understanding of what is going on with financial markets. So today we're going to look at one of the big ones, namely NFP, non-farm payrolls news, which comes out, as I said, in about 10 minutes in the US. We'll discuss what it is, why it's important, and how we can look at trading it, right? And it'll be my views on the NFP. It'll be my views on how we trade it. Others may differ. That's absolutely fine. That's what makes a market. But there's lots for us to be able to talk about. So, firstly and foremost, what is NFP, right? What is it? Well, the non-farm payrolls is, as it says, an important economic indicator related in particular to employment in the United States. It represents the total number of paid workers joining the US workforce in that last month in the US, minus farm employees, government employees, private household employees, and employees of non-profit organizations. So actually what it is basically focusing on the growth of goods, constructions, and manufacturing jobs, all right, payrolls for the last month. And what you'll find is that there's many traders and analysts, will watch the NFP, and as such, it can generate a volatile trading session. Mostly it can be volatile. Sometimes it can be a damp squib, depends upon what's going on in the world. We know there's quite a lot going on in the world at the moment today, which might have an impact, we shall see. But invariably what it does is it gives us a great indication of the health of the US economy. And that is what is important to traders and analysts, right? Trying to understand whether that, the US economy is growing, whether it's moribund, or whether it's actually whether it's decreasing in size. All of which will have knock-on impacts, to other bits of news and information, all of which will provide, either threats or opportunities to trades. So, why is it so important? What is it that makes it important to traders? Well, as it says, the NFP report can cause one of the largest rate movements of any news that we see, especially in FX markets, right? But it also has a reflection on the indices, on one or two particular stocks, and also some of the commodities. That is what makes it of interest to many analysts, traders, investors, funds, and speculators. Lots of people will be looking and watching to see what the news is today and what impact that will have. What you'll find is that some traders will try and guess the directional bias, right, prior to the news, based on what might be the proposed number, what we might actually see as the ongoing trend. Others will try and trade after the news event itself. And that generally tends to be the way I look to operate, and that's what will influence my views for the rest of this session, but we'll try and give you a little bit of a view overall. And as I said before, because so many parties are interested, it generates volatile trading sessions, for many traders, and for many traders, they actually prefer not to trade over NFP, mainly because sometimes it can be so volatile that actually it's easy to make mistakes, to fat finger issues, because things can be moving so fast and changing so quickly. So just because we're doing this session, just because you're learning about NFP doesn't actually mean you have to trade NFP, It might well be that, you're just looking at it as an educational insight, that you just want to have a look and see, what is it all about? How does it occur? What sort of things does a new trader need to be aware of as you learn and generate and understand and build your own understanding about financial markets? So when does it happen? Is it happen all the time? NFP happens at 08:30 US Eastern time, right, on the first Friday of the month. But not generally if Friday is the first day of the month. If Friday's the first day of the month, it normally gets pushed back. But it's normally the first Friday of the month, 8:30 US time. So for me here in the UK, that's 1:30 time in about 6 minutes, or maybe it's 2:30 if you're on Central European, or wherever you are joining us, because I do appreciate that here at Admirals we do have a global audience. You just need to just work out what time is 8:30 US Eastern time. What is that time for you, so that you can be ready and prepared for it. When it comes to looking at how do we trade it, well, when it comes to all news trading, I emphasize one particular word, and namely that word is expectations. All right, this is the word that I would focus on. Why is that? Is because how how does the news come out, okay, versus what the expectation, versus what the forecast was? Because what we see is, if, as it says, if we get a higher NFP, well, that tends to be a good reflection of the US economy for the most part, because it demonstrates economic growth. And we'll have a little look at the numbers in a couple of slides' time. An unexpected change in NFP numbers can cause a very mixed reaction. So, if we're expecting, one number, all right, if forecast is for one number, but actually we get a very, very, very different number, that, that gap in expectations, okay, between what we thought we'd get and what we actually got, that is what the volatility fills into and causes, a little bit of anguish, a little bit of tension, shall we say, all right? And so that can actually be, as I always say, it can be either a threat or an opportunity to you as a trader based upon your understanding of markets and your understanding of yourself and how you particularly trade. What that might also lead is if there is an unexpected number, is that what will happen is the traders will turn to the subcomponents of the report to gain deeper insight, and we'll come on to that in a slide or two. And not unsurprisingly, a lower NFP number is, it's a detrimental sign for the US economy. And if it's a case of, it might just be 1 month, but when we start to see a particular trend, all right, when we see a trend of kind of the not being able to meet expectations month on month, that is giving us an indication that invariably what we're seeing is a decline in the US economy. And because the US economy still rules the world, that has a detrimental impact, across the global scene. So what becomes important then is, of course, is understanding the economic calendar. As I said, I'm watching more because I'm going to switch across to the charts in a couple of minutes. It is that invariably, what we understand is, economic calendar and where and how the data comes out. So for today, here we are, this is March, okay, March 2022. What we've got going on is the Ukraine war has been very, let's say, active over the last week or so. That has had an impact on financial markets. So that is basically, I would say that is the kind of dominant sort of sentiment we're looking at the moment, but still traders will be looking at this today. As you can see here, okay, the expectations for the non-farm payrolls for the numbers for February, the consensus is for about 400,000 jobs. Okay, to kind of have a good strong number. Previous month, okay, was revised up to 467,000. As I said, there will also be a little bit of a couple of other pieces of information. All right, so what they'll also announce is things like the unemployment rate. Okay. Consensus is that will come out at about 3.9% against the previous of 4%. So of course, the unemployment rate is thinning. That can be allocated to sort of, let's say, industry getting back on its feet in these post-COVID times. But also, what we'll also be interested in is what is the average hourly earnings, okay, for month on month for February. And we're expecting about 0.5%, all right, okay, increase in that. So just keep those numbers in mind, because when we hear and see what the numbers come out as, well, then invariably, what we're going to be looking at is, what were the actual numbers versus the expectation. So, as I said, about 2 minutes ago, as I said, that, what we're interested in is interpretation, right? And people will ask these particular questions around about the NFP numbers. What is the unemployment rate in the economy as a percentage of the overall workforce? That can be useful. What sectors did the increase or decrease in those numbers come from? In terms of the average hourly earnings, has it changed? And if so, in what direction? And have there been any particular revisions of previous non-farm payroll releases? Because that in itself can make an impact on the actual sort of the way the market returns. So what we're going to do is I'm going to sort of switch across the charts. Now, I've got a few more slides, but we just want to see the numbers, all right? And then we can come back and go back into these slides. So just bear with us a moment. Let's switch across to the charts, okay? So what have we got here? Bang, bang, bang. Let's bring them up. Super. All right. So let's just move these around a bit. So I'm hoping you can see a little bit better. So what I've got here is this is the Admirals MT4 platform here, and what we're looking at is there's a thing of it. Okay. So as I said, what we've got is I have my squawk box on in the background, because actually what that's doing is that will be the quickest way to get an identification of the numbers. But what I have here is just a simple sort of, MT4 platform setup for news trading. What I have here is I've got the Dow Jones here on the 15-minute chart, the NASDAQ on the 15-minute chart, pound against the dollar, dollar against yen, euro dollar, okay, index.
678, that's 678, but expected of 400,000.
Boom.
The unemployment rate, that's 3.8%, below expected of 3.9%, and the headline 12-month payrolls, that's biased into 481,000. The earnings components, that is 0%, below expected.
Boom. So you might have heard that in the background, okay? So the numbers just came out there. Remember what we were saying about expectations, all right? What we saw was that, there was an expectation of the numbers to be 400,000, and actually the number looks like it's come out at 678,000. So that's a big beat, okay? That's a big beat. I'm just looking here on my other computers here just to get confirmation on that, just to see how that particularly plays out. So just bear with us a moment. That's what we're just wanting to get all of those numbers in there, okay? Just make sure that's confirmation on it. As I said, here we go. Bang, there we go. Yeah. So, we were expecting 400,000, and actually the numbers were 678,000. Right. So, that's a big beat. Okay, that's a big number, and what will happen is all the analysts will be interpreting why that's happened. But what we're interested in is, well, what difference does that make to the market? So if I just quickly on these here, just switch across to the charts, okay, and start to have a little look. What I'm particularly interested in is just to see, what is occurring, what we have a look at in terms of how the market initially reacts. Now, I said a couple of slides ago that basically what some people look at too is they will try to effectively, identify what the likely post-news direction is before, and they will put their positions on. I can understand why people would do that. It wouldn't be my particular, if I'm honest, it wouldn't be particular my choice. Okay, my version tends to be sort of works and focuses on wait for the news to come out. Okay, let the market have its volatility, which might be for about a sort of a 10 to 15 minute period, and then actually look to see, what the market decides, how it looks to prefers to operate. Okay, and that's what we're particularly looking at here. Okay, so I'm just basically I'm gonna sort of see what the sort of the platforms are telling us, what the kind of initial reaction is. Okay, so as I said, that kind of number, 678,000, is a big number. It's a big beat. Okay, so that gives us an indication that there is, strength in the US economy. Then you have to start to think about, well, okay, what impact will that particularly have on the on those markets? Because what we will expect is that people already expect that the Americans to raise interest rates, but all that means is that just means it's going to happen probably faster and quicker. All right, over the next couple of months. That is good for the dollar, not so good, okay, for the actual stock market. Okay, stock markets don't particularly like to see interest rates rising, but as many of you already know and have experienced personally, we are in a fight against inflation, and what we're likely to see is a good deal of movement against that as the sort of Federal Reserve central bankers look to come and try and control that as best they particularly can. Just looking at it and just watching to see how it updates. The challenge we have here, okay, that we've had today is that, as I said, we've had the Ukraine war has been going on. This morning, what we saw was news basically that there was shelling of a nuclear reactor, fighting going on around a nuclear reactor in Ukraine. To be fair, that is always going to worry and concern lots of people. That actually had a knock-on impact on certainly European stock markets this morning, and also on things like the euro itself. What we can see here is that actually if I look at the euro dollar, if I try and bring that up here, okay, is that invariably the euro has been sold off massively already today. And the US dollar, okay, the US dollar has risen up there, and so that's the kind of let's just move with this. What I'm interested in here, this is the euro dollar on the 1 minute chart. You can see for yourself, even over the last couple of hours, that has been a pretty, pretty clear trend, hasn't it, on the 1 minute chart? Okay, it's effectively euro weakness, euro dollar strength. What would interest me is that, we've kind of, if I just bring into the drawing, what would interest me here is that, it's a bit of a double bottom there, just running into the couple of minutes before that. And you'll have to look at, well, is that the kind of, does that number work for us? Does that help us? It might be a little bit too thin, because my own bigger view is that regardless of what the number will happen, I think we might see markets react differently this afternoon, as it's Friday afternoon in Europe, because what will happen is that, European traders who have been short markets all week are going to look to come and cover their positions. All right, they're going to want to cover their positions, going to want to take their profit from a good week of shorting markets. They're not going to want to take the risk over the weekend. So, we will watch this, okay, come back to this over the next 5-10 minutes to basically, to see how it effectively plays out, okay, as I said. Generally, I tend to leave it for about 10 to 15 minutes after the news comes out, because it can be unbelievably volatile. The charts will be whipsawing about. The spreads will be quite wild also. So I generally tend to let all the madness sort itself out, and then basically look to sort of see, is there a strong trend that would come out from that afterwards that basically will give us a particular opportunity. And you can see, even here in the sort of the dollar yen here, okay, it's effectively just swinging back and forth, okay. And when the market's doing that, trying to fight that, okay, trying to trade through that, those of you who have been joining me here before, it's not a particularly smart way to operate, and invariably it's as I said, my suggestion is just watch it. All right, let the market play its hand, let the market decide what it wants to do, and then basically try and surf that new trend that comes out of it. So yeah, as I said, this is a dollar yen here, and you can see it's just, what's that, 145? It's kind of swung back there. It's in a small range because it's dollar yen, about a 20 pip range, okay, dropping down and back and forth, and it's just it's just basically taking its time to work out what it particularly wants to do. Not unsurprisingly, is that if I bring up the dollar index, there's the dollar index on the 1 minute chart. If I go up to the 15-minute chart, you can see that actually all of this week on the 15-minute chart, the dollar has been strengthening, okay, from down here at, what was that, about 96.60 here a couple of days ago. Now we're trading around about 98.70. You can see in particular this morning, the market might be said to have already made a very strong move, all right, prior to the news. So now we sort of look to see, well, how is it going to decide to continue to move on? So, the market's going to sort of just whipsaw about there, okay, for about at least another sort of next 3 to 5 minutes. So what I'm going to do is we'll go back to the slides, okay, and then we'll come back in a few minutes just to see how that market is reacting after the after the sort of kind of 10 minutes. Let's call it like a mad 10 minutes or so after the chart after the news has been released. So let's just bring up those slides again. So. Right. So, a little bit as as I've just been talking about, okay, in terms of, some traders would look to pre-position themselves before that news gets released. That is not my particular style. The reason being is that, even if you have a good handle on the numbers, it can be different the way the market chooses to react. So, we just saw there markets, kind of just effectively continuing the strong moves from this morning, based upon the fact that the number was 678,000 as opposed to the 400,000 that it was expected to be. As I said, as I was saying, I generally tend to trade afterwards. Generally leave it for about 10 to 15 minutes after the news release, because then we start to get an idea of what's actually particularly, what if any particular new trend is likely to come out of it. So, I will look to utilize standard setups that you can find, all right, on the if you go into the Admirals YouTube channel and look at the Trading Spotlight webinar series, you'll find that there are already webinars there on things like inside bars, 3-bar breakouts, 1, 2, 3 tops and bottoms, domino candles, perhaps not Vulcan versus that's just one of my own particular preferred favorite setups. But what I'm still looking to do is just basically utilize simple price action setups that, you know, I would use in my normal trade, but just effectively, you know, applying it to what we see in terms of kind of volatile markets that occur for the, as I said, for kind of like the 10 to 15 minutes after something like the big news release has been driven. So, you know, what I can also say is that, you know, getting ready to do this, okay, preparation is key, right? So, you know, normally I would be, you know, a little bit better prepared because actually I'm not having to do kind of a webinar at the same time. So, you know, what I'd be saying is that you'd be understanding those FX market trends. So today, basically, the trend has just effectively been buying dollar, selling euro, all right, and everything else, as we've had a real risk-off environment, and you know, and that carries forward into what you're looking to in trading. So, you know, because the NFP is, of course, numbers to focus on the US, well, then invariably what is important is, you know, we look, excuse me, at the US, US relevant instruments. So you're going to be looking at focusing on the US dollar. Okay, how does the US dollar react to this? But then you can also look at, you know, the other major dollar pairs: pound dollar, euro dollar, Aussie dollar, Kiwi dollar, dollar yen, dollar Swiss, dollar CAD. So in the present day, okay, Aussie dollar and Kiwi dollar have performed very well, and the reason is that because, especially in the case of the Aussie dollar is just you know, it's on a tear based on the rising commodity prices because of what we see going on in Ukraine, right? That still has a knock-on impact to how the markets will react after NFP. But, you know, if you're just following even the dollar index, okay, on the MetaTrader platform, well, then you can actually see how it, you know, how it plays out, and that gives you an indication of, you know, whether the dollar is strong or weak. In this particular case, exceptionally strong, right? And, you know, you'd be looking at how to not fight that, basically. So as I said, you look at folks at the US dollar, then have a look at, you know, are there any particular other currencies that are in a trend? And if they are in a trend, has the NFP price action given you an opportunity to continue that trend, all right, to join that trend? Or other currencies, you know, are they very clearly ranging, okay, in the run up to the news announcements? As I said, I'd always be looking to see, you know, if there are like kind of double tops and double bottoms starting to appear around the kind of time of the news announcements. So, you know, as I said, focus on the dollar to begin with, all right? There's a bit of a dollar holler going, right? What is the US dollar doing compared to the others? You know, is it asleep, right? Is it awake, or is it angry? Is it, you know, really thrashing about all over the place? I'd say from what we looked at there, the dollar is very much awake, all right? And it's very much got its own direction. We're hitting highs that we've not seen for, you know, pretty much maybe, you know, sort of a good while, okay? I'd say probably maybe nearly 2 years, okay, in terms of US dollar levels. Are there any evident correlations that you can take into place? We'll look at that in the charts in a moment. Are there any particular obvious trends? Well, as I say, euro has just been sold off across the board. Dollar has just been bought across the board. And, you know, will it provide an entry, which we will go back and look at in a moment. You know, and well, you know, you have to also be prepared to recognize that, is there any other major US news coming out during the session today? There is talk that one or two of the US members of the Federal Reserve may come out, may do a presentation, but we shall see about that. All right. What I can do in terms of giving you some, you know, sensible rules, all right, for any kind of news trading is that, you know, my normal suggestion to trade is that you should be out of any existing positions prior to the news, right? So, you know, unless that position is already in a stunning level of profiting, my general rule is that, you know, you should be out of your positions, you know, 5 to 10 minutes before any news comes out, because it can be really volatile, so you don't really know what might happen there. You know, and make sure you carry no orders into the news. What does that mean? That means like having particular orders on the platform, because what you can see is, you know, there's, you know, huge volatility spikes, you know, and that might actually sort of, you know, that might clip you in when you're, you know, you're not particularly ready, or the, you know, the market might not really be ready to go in that direction. It might just actually just be a pump and dump operation. Then what we're looking to test is, well, can we enter post news? All right, you know, once the market is thrashed about for a bit, okay, and we've worked out who's the winner and who's going to lead, is it possible for us to actually enter post news? That's what we're particularly interested in. Once the news has been released, well, a bit like what I was saying a few slides back, The question to ask is, did the news beat or fail expectations? Because that will drive, right, the sentiment within that market, and therefore with that, the actual sort of price action move. You heard yourself, okay, today, you know, it spectacularly beat expectations, okay? And when we go back, and, you know, in 5-10 minutes, we'll be able to see, well, all right, how does that help? You know, how does that actually work? What does that actually mean? What was the initial move, okay? Because remember, sometimes, all right, the first move is not the correct move. Sometimes that could be, you know, an incorrect move, a knee-jerk move. And what we see is, you know, market makers, dealers will look to kind of fade that first move. Right? So we want to be a little bit savvy, all right, around that. Are we near any previous days highs or lows? Okay, that can be useful because there will be lots of orders around that. That can be a useful place for us to look at to see where we might want to sort of do our business post news. Mike's asking, what is the symbol of the dollar index in MT4? Good question, Mike. If you'll bear with us a moment, when we switch back to the charts, I'll show you specifically, okay, how you can find it so you can put it into your own particular charts. Are there any other support or resistance or big levels, all right, that are around that particular area? So it's important to know those big round numbers, okay? So what we're seeing is, what you'll expect is that, you know, for example, today, euro dollar has, you know, traded through 110, okay? It's a big round number, okay? Not if you'd have asked people a month ago, they might not have expected that, but that's what we have seen. And, you know, we've seen it on a couple of the other big elements. We look at, you know, West Texas oil, okay, it's comfortably trading above $100 a barrel. These kind of, you know, we want to understand, are there any of those particular big levels, or, you know, sort of big round numbers that are nearby, or any that might actually be sort of almost like a magnet from the price to move towards. Are there any particular double tops or double bottoms forming? Are there any kind of domino candles? And if, you know, if there has been a move, has there been any chance to use things set up like a Ross hook to basically to add to it? So in conclusion of the slides, before we go back to the charts, all right, you know, the non-farm payrolls is one of the major monthly economic indicators, gives us insight on the health of the US jobs markets. It is released 08:30, the first Friday of the month, and lots of traders, analysts, financial institutions, funds, speculators take a specific interest in the NFP announcement. So it can lead to a volatile trading session, all right? Some traders will try and take their position beforehand. That would not be my preferred way of trading something like NFP. Others may differ, that's fine, that's what makes a market. Others will try and trade after the news, and that is where I will particularly look to sort of focus. And remember, you know, what I'd say is all trading is based on expectation, right? How did the news, okay? What was the news, right? What was the actual news compared to the expectation? Because, you know, if the expectations, you know, have not been met, or there's a big difference, it's in that, okay? It's in that space where traders and analysts have to quickly get their mind, you know, sort of realign to what the kind of the new reality is. That is what can create volatility, and that volatility can, you know, as I say, can be either an opportunity or a threat. All right, if you're educated, like here at the Trading Spotlight webinar series, if you're educated, it gives you the opportunity, a better opportunity to turn it into something positive itself. So why don't we go back to the live markets? Before we do, okay, you know, if you want to get in touch with Admirals, you can do so there. The email there is global@admiralmarkets.com. They'll be very happy to help you. As always, you can follow us on Facebook, and also you can see there on the YouTube channel as well. And for those of you joining us here today for that. So let's go back to the chart, shall I? I'll go back to let's see what's the live markets are. Let's see what's happening. We've got about 5 to 10 minutes. We can take a look at what is occurring. Okay, so bang. Excuse me. Okay. So James says, thanks a lot, Paul. You're very welcome. So here we go. This is for Mike. This is the US dollar. Okay. Here on the MT MetaTrader platform, USDX H2 is the sort of the quarterly version of it. Let's bring it up here. You can actually. So how does it find on the element? So it will be updated. Bang, and hopefully you can see it. Hopefully you can see it there. Okay, Mike. hash USDX H2. Now remember, that's kind of H2 because of the contract, all right? Okay, and that contract will particularly change every quarter, all right? So we are at the moment, okay, we're switching from the kind of the March contract to the June contract, all right? That's what we're particularly moving across to there at the moment. But you can find that. You're very welcome, Mike. So yeah, we can see what's happened here is. Let's try and zoom in here. Let's try and zoom in. What we can actually see is that basically the particular dollar index, okay, the dollar strength is continuing. That's the 15-minute chart. Let's just go to the 1-minute chart, okay, if it can upload it, all right. And there we go. So let's bring up the data and stuff so I can just show you a little bit better what's going on and stuff. Is that there we go. So what we're seeing is the news coming out here, and then you can see over the last 5-10 minutes or 10-15 minutes, what we're seeing is considerable dollar strength, isn't it? That is that dollar strength story, which is what we were coming into beforehand. That is just effectively continuing, and on the same time, the flip side of that, the euros continue to weaken. So, we looked at this, we were looking at this here saying, was that a double bottom there? Okay, that was looking to form. Was it, was it strong enough to form? But clearly that is not the case, isn't it? That is, we're just getting more of the, what I'd say is that, it's a case of that dollar strength has been accelerated, not just because of good numbers, but also because of the effect of the Ukraine war. What we have to realize and think about now is, if you're a big fund manager, all right, or operating somewhere, maybe one of the emerging markets of the world, maybe you're in Buenos Aires, or maybe you're in South Africa or Indonesia or something like that, okay? And you're looking, where do I deploy my money? Well, invariably, when there's trouble in Europe and trouble in Asia, okay, maybe South America and Africa aren't necessarily where you particularly like to be, because there's too much volatility. Well, then actually, the American markets, that just makes the American markets the only game in town, okay? And what we're seeing here is just more reflection of that. We can see that effectively that the euro weakness has just continued. After the news, it's moved up a little bit, but invariably it's just collapsing down. Okay, it is just the trend that we saw earlier. If I just try and go to the 15-minute chart, is that if you try to go up there, okay, to look at that, is that what we'll see is that it has just continued. And if anything, what you'd look at is that this is this was a fail to return setup, all right, which is what we covered. Was it 2 weeks ago on the 2 weeks ago on the Trading Spotlight webinar? We talked about how to trade the FTR. This is clearly an FTR setup. Price is in a downtrend. It makes one particular candle, and then the next candle just completes and carries on. The thing is that it's moved so far and so much that it's not really. Whilst it is a setup, you'd be unlikely to trade it because the move has actually just been so strong. Remember what I was saying earlier. If I just look at the daily chart, let me just put in a bit of another bigger line here. Okay, is that here you go. What we had here is the big round number at 110 on the euro dollar. As you can see today, has been well and truly firmly broken. Right, if you were to look at any of the euro pairs, that is just, that's the story across things, that the euro is being sold off very strongly. So what we're seeing is those kind of the implications of of the news coming out of Ukraine is having more of an impact, all right, even more of an impact than the NFP numbers we can see there. Okay, and if we have a little look at what's going on here in regards to let's say some of the other currencies and other particular instruments, why don't we have a little look at stuff like oil and gold? What we can see here is, bang, let's just make this a little bit. Okay, so yeah, so what we see in oil here on the 1 minute chart is having the news come out, price popped up a little bit, okay, and then invariably what it did is it printed there a bearish Q reversal, which became a double top, and then price dropped down. And price is now fitting in a double bottom here, down at that $112. Okay, remember what I was saying earlier is that, what we've seen is, if I just go to the daily chart, you can see that, well, the oil price on the daily chart has just accelerated there. It's just going absolutely mad. Okay, and the 15-minute chart isn't, I don't really particularly see that there is a particular trade opportunity there. Okay, per se, right, this particular moment, right. I think the kind of the very short, sharp sell trade. Okay, well, the 1 minute chart was the opportunity. But I think it's just, I wouldn't surprise me if we continue to drift away back up. If I look at the 5-minute chart, there's a kind of a three bar reversal there, okay, the bullish move, and you'd probably we're probably expecting it to probably drift back up to at least that kind of 113.50 area. That's what we'd be looking at, just based on what we're seeing here today. Have a look at gold. Okay, gold is. If you look at the kind of the 1 minute chart, it's been in that kind of range there. If we just go up the time frames a little bit, okay, what we can see is here we go. It's a little bit better. What we can see is there was an awful lot of big range overnight on gold, and so we're trading within it. The trend is up on that, okay. But what I'll be looking to see is that it's made a move there. I think you're probably going to have to give it maybe another half an hour, I'd say, to see if it will consolidate before it makes its decision on its next move. Okay. Once again, if we go to daily, what we've seen this week is, of course, because of the geopolitical situation we find ourselves in, that is actually what we're working on here. Okay, that's what we're working with. It's popped up and it's playing its way out there. Okay, so it'll be, I suspect we'll see strength, but you'll be looking at ways to sort of work with that. So if we look at the here we go. If we look at this is the Dow. This is the 1 minute chart of the Dow, and hopefully what you can see is this candle here is where the news came out. Okay, where the news popped out, and then it kind of basically consolidated. And this is, as I said, I normally will wait 5-10 minutes, but today it's popped up, it's consolidated there, okay, for about 4 or 5 minutes. Let's just get the old drawing tool up here. What price did is it consolidated there, okay, and then it basically decided to make its move there, okay. So it's even though the numbers was good. Okay, remember what I was saying quite early. If the number's good, that just means that the Federal Reserve are going to have to really sort of look at their how they deal with inflation. All right, okay, and then that means they raise interest rates. As a general rule of thumb, interest rates, they might be good for the currency, but not so good for the stock markets. All right, because it raises the cost of borrowing. If you're in a company, if you need to borrow to invest, and it's going to cost you more, you're less likely to do it. Okay, and so what we've seen is a little bit of a drift down there, okay, on the 1 minute particular chart. Okay, so I'm doing that. Okay, so we'll just have a little look at here we go. So I was saying that inside bars can be very very useful around the NFP. What we've seen is we've had the first 5 minute candle gone up, and then it printed an inside bar. As I said, I would normally be waiting, at least 10-15 minutes. But today, as you can see, even on the Nasdaq, it didn't really particularly want to wait. It just basically wanted to do that and drop. So some kind of nice moves there. What I'd be suggesting now is what you're going to see over the next, maybe I'd say half an hour or so, is that kind of, as I said, that initial thruster will have rolled over and lost its interest, and now what we're going to see is probably maybe the longer term trend exerts itself. So maybe we can already see that invariably maybe that is what's happening. We'll actually see, for all those people who are short euro, well, actually what will happen is, it wouldn't surprise me this afternoon if all those people short need to cover their positions, take some profits. And that's what we might see, for this afternoon is actually markets move based on on covering their existing profits, more so than basically than anything that's come out of NFP itself. Okay, there, ladies and gentlemen, we're, as always, we kind of run out of a little bit of time there. Okay, appreciate all time flies when you're having fun, or time flies when it's a major news announcement. What we'd love to do there is just to give you a little bit of insight into it. We're saying today is that the price action is coloured by what has already gone on this morning, based upon the geopolitical situation we find ourselves in, and that will have already had that's already had a huge impact. You can see how some of those elements of trade. But what I'd be saying is, for the next half an hour or so, it might be worth watching, because what we might do is, we might start to see a kind of a maneuver change as people want to look to take profits from their shorts, either from their shorts in things like euro, or they're from longs in stuff like oil, gold, and the US dollar. As always, okay, I wish you the very best of success in your own trading, ladies and gentlemen. I hope that you have a fabulous trading day and a fabulous trading week ahead, and I look forward to speaking to you soon at the next Trading Spotlight series. Trade well, everybody. Cheers.